Hi all, welcome to TCM Education. In this video we're going to discuss what happened on Friday. Big moves up and down, seemingly in the same sector. And then we're going to discuss other winners and losers and see where we're heading into the second week of September. Let's get right into it, and let's start of course with the biggest winner of Friday. This is AVGO / Broadcom. So what happened on Broadcom? Amazing earnings. On top of the amazing earnings that yielded overall only 9% after the stock gapped up, as you can see here, nearly 20%. So a 20% gap up, then the stock started to sell off, and basically the last move down was from the VWAP. So now the question is, and I don't want to discuss the reasons. Obviously, great earnings, a deal with AI. You can read about it if you're interested all over the media regarding the earnings. But the real question is, how do you trade AVGO? So the stock gaps up nearly 20%. You think it's a gap up and go? It's 20%. It's not very easy to continue after 20%, which creates a huge profit-taking opportunity. So, despite the amazing news, and let's ignore the background, which is the weak jobs report on one hand, and then the market started with a gap up and continued higher in the first half an hour. Leave that aside, that complexity. Now let's talk about AVGO. How do you trade it? It's so complex. So again, watching the chart, there's no way to trade it long. Now, do you want to trade it short? Obviously, we don't want to trade gap uppers short as much as we don't want to trade gap downers long. In this case, if you do want to trade, you're gonna long, you're gonna lose money. There's no way you're gonna make money on the long side in AVGO, selling off basically from 355 to 330 to under 330. Lows of the day, let me see, highs, lows, 331. So basically it lost $25. That's like roughly 8% down. This is basically an 8% move down intraday. So again, it's a losing stock intraday. You cannot trade and make money on a stock that's losing 8% unless you pick up the bottoms. Again, why would you? Okay, so don't fight the trend. The trend is clearly down. It's true that the mindset is not really clear here, because you're basically shorting the strongest stock in the market on an amazing earnings report, great news, and everything. But again, you need to find an entry point. Is it easy to find an entry point? No, but it's easy to find an entry point here at the VWAP. So those who trust the VWAP, those who trust the VWAP and round numbers, you have here this consolidation under 340. So that's the trade, 340 down to 332, basically closing at 335, risking very little. So you risk less than 0.5% on this trade. If you trade percentages like a $10,000 position, $20,000 position, doesn't matter, a $5,000 position or a $100,000 position, you can trade the stock short from the VWAP with very little risk. I think this is the only great trade with very little risk. I mean, obviously there were entry points along the way here. Hard to pinpoint one. Okay, there were entry points. I cannot pinpoint one. A failed reversal, then the move to the VWAP, and then the stock close, well, not at the lows of the day, but near the lows of the day. So that's regarding AVGO. Again, big winner. For day trading purposes, it's a short play. For day trading purposes, it's a VWAP. I think it's a VWAP play. That's my opinion. Of course, there will be others that some of them are emailing me and telling me they are this is this entry, and of course everybody is right. I mean, how many entries are in a stock basically on a daily basis? Endless. But for educational purpose, if you want to learn something from this chart, okay, what can you learn here? Join at where do you join? Now when the stock comes back to the VWAP, I have an indicator, the VWAP. I have a stop loss above the VWAP. Okay, so anywhere you enter under the VWAP, the stop loss is above the VWAP. So at least here you have a pattern, something that is happening again and again. It's not like the only occurrence where a stock is down after great earnings and then you cannot trade it short because there are no entry points. There are entry points, of course. It's not very easy to trade this mega mover, but in this case, this is the area, I think the only area where you could have made a good chunk of money, of profits, with very little risk. Okay, this is the main point, with very little risk. So you can risk here 0.5%. That's $1.50 or $1.70, whatever it is, and gain 4 times as much. That's 4 to 1. I think that's good enough. Okay, let's move to the other loser. In that case, a real loser, AMD. So the gains of Broadcom are basically at the expense of NVDA and AMD. And of course, you can see here the huge gap down in AMD. So basically, the stock is down from the open, and it's a short candidate now, as opposed to AMD. You have an entry, this round number here at 153. Stop loss 154.50. So that's a full 1% of risk. But you can trade AMD with a technical pattern. It's not an easy trade by any means, but at least it's a clear trade. You have the entry point, you have the stop loss, you have the move down from 153 to 150. That's $3, risking half of that. Is it an amazing trade? No. But it's still a winning trade if you enter it under this, let's call it the bear flag formation. I mean, I would love to see this stock, basically consolidate under the VWAP. In this case, so the entry is 153, and the stop loss is sorry, it's not. Is it 153? Hold on a second. Let me see that I'm not making a mistake. Sorry, it's 153.80. Okay, my mistake. So it's the entry is 154, not 153. 154, stop loss 155.50. So it's still, my mistake. I just misled you by $1 up and down, but the stop loss is the same, $1.50, which is exactly 1%. So you enter short 154, it drops nearly $4 on a $1.5 risk. Let's call it still 2 to 1. Okay, still not a great trade, but the round number 1 here, the stop loss is clear. What I wanted to see is that the stop loss, instead of being 1%, is 0.5%. Then you can load up more quantity and maybe use the VWAP as a stop loss. In this case, it didn't happen. Now, what did happen here is, again, you can see the VWAP helping us with a reversal lower, not as brilliant as the AVGO trade, but pretty much the same concept, where the stock is coming back to the VWAP, now moving above the VWAP, but still, you shorted the VWAP, you have a stop loss. You shorted the VWAP, you have a stop loss. Not all trades are the same. Of course, here you have the VWAP at 152.50, the stop loss at 153.20. So that's 70 cents. Okay, so this trade, for example, this is 0.5% of risk. Only 0.5% of risk. It's a very good trade. Okay, on any stock. I mean, on any stock that is a great mover. If a stock is not a great mover, why would you even bother? But when AMD is up 6% or down 6%, in this case down at one point more than 6%, you want to be in the business of shorting AMD. It was weak all day. It did have a nice reversal from 150. We'll see. I mean, it should be on everybody's watch list for Monday. So AVGO, NVDA, AMD, definitely on everybody's watch list come come Monday, come tomorrow. Okay, so let's move on now to the big winners and losers over the weekend. Okay guys, so this is basically our daily power list for Friday. When I say power list, I mean stocks that went either ballistically up, like CSIQ, IoT, and Lucid, double-digit winners, and BRZ. Maybe we will have the time to look at that chart, or turn to be sore losers like KVEU, ASAN, Dutch Brothers, Sharplink Gaming. Robinhood basically ended up lower, but got great news after the bell. It was actually added to the S&P 500 and gapped up, I think 10% after the bell. So that's definitely going to be a stock to watch come Monday morning. So remember, Robinhood is going to be on everybody's watch list, added to the S&P 500. Okay, so let's go with losers first, because we are on a streak after watching Broadcom deep 12% intraday. AMD dropped as well, closed down like 7%, so we have a combined 12 plus 7, 19% on the downside. Let's start with KVEU. Again, nothing surprising at the open. Basically the stock did not report any earnings. Everything was cool, fine and dandy. Then the news came out, and the news are brutal. That the US Department of Health is considering pulling Tylenol, which is I guess a blockbuster for KVEU, off the shelves, and this is the initial result. You can see the stock basically trading sideways. Nothing is happening until this news came out at 12 noon, and then the stock drops from 2050 to 1750, 17, that's roughly 20% or 15%. Then it recovers. Basically ended up with ugly losing day. But again, it's very surprising. How can you protect yourself if you are long? Of course, you have a stop loss in the platform. It will execute. I don't know where. Okay, again, we have a huge panic bar, like 3, 6, 9 minutes of 9 minutes of panics, then a recovery stage, and then another leg down. I mean, was there basically a way to make money out of this? You know what? I'm looking at the short. At least on my platforms, it's not shortable, but let's say it is. So you need to short it anywhere here under this bell flag formation. And if you can do basically short this bell flag, at least you have a chance of a good move, assuming again that there are shorts on your platform. If there aren't shorts on your platform, then what are we talking about? So again, intraday news, that's something that impossible to trade. You wake up or you see the stock moving down if you have an alert on it, or you're getting an alert on stocks that are big volume movers, or it suddenly pops on the screener down 5% or 6% or whatever it was at this point, and then you have a chance to take the trade. If you don't have shorts, not relevant. Okay, let's move to the second one, ASAN. So ASAN ends up down a loser of 8%. Here, a totally different story. Easy to trade, very good liquidity, a gap down that could have been followed, and then you can see this triangle breakdown at 14, clear stop loss at the VWAP, exactly what a technical trader would want to see. Wow, this one is also not shortable, at least on my platform. Oh, what the fuck? Anyway, so again, for educational purposes, let's assume it is shortable, but that's, I think, the way you can trade ASAN. So you get the alert from the screener, or from the top 20 loser, or from again, if you're watching ASAN, so those are the losers. Of course, if you're not watching it, it's futile. You're watching it, there is a way to trade it, actually very technical. You can see the lower highs, you can see the round number entry, you can take the position here risking 17 cents. Let's call it round things up, 1% to the VWAP. 1% on a $10,000 position is $100 of risk. On a $100,000 positions is $1,000, and anything in between. The volume is very good. Actually, the stock traded 9.4 million shares, so the liquidity is perfect. The only problem, again, not shortable, at least not on my platform that I'm showing here. It's moomoo. And again, how do you manage? Because many people ask, okay, we understand the mechanics of how to enter the trade, how do you manage it? My style where I teach is I'm not managing any trades, okay? Sounds a bit, I don't want to say cocky or stupid, but the idea here is that you have to trust the market. As much as you want to trust the market, when you're buying the strongest stocks here, and if I'll go back to the list of stocks here, let me go back to the list, 1 second, daily power list. So how many stocks enter this list out of 9,000 stocks and ETFs? Only 14. So I have here only 14 stocks that match this super aggressive criteria that says that I want the range to be more than 10%, intraday range. I want the volume to be over 5 million. So very few stocks out of thousands fit this criteria. Some of them fit the criteria early in the morning and then don't move. Others fit the criteria late in the day, you cannot trade them. So basically out of this list, maybe half are really eligible. Now you can see KVEU is a short play, but it's not shortable. ASAN is not a short play, and it's not shortable. So basically, out of the short plays, sometimes 50% are not shortable. Going back to how to manage a trade or how to not manage a trade. Let the market. That's my take after watching charts for so many years. Don't manage. Okay. Worst case scenario, you have it built in. We're losing 1%. The stock drops 3%. Sorry, the stock drops 1%. You move the stop loss to the entry. So basically, after a couple of minutes here, this is your stop loss. A couple of cents above 14. So the stop loss is 14.02. So you risk losing 2 or 3 or 4 cents. So which is nothing. Okay, so zero at this point. You have zero risk on the trade. So now the stock drops, moves up, moves down, moves up. So obviously you want it to sell it because you want to sell it at 350 or 355 at the lows of the day. It doesn't work that way most of the times, but you're trading short the worst performing stocks. Those stocks most likely will continue to drop. Most of them will not close exactly at the lows of the day, but they will deliver better results without you managing them and adding and selling partials and incurring sometimes losses on adding trades. Stop doing that. Let those potentially winning trades become big winners, and some of them will become 5% plus winners. Now on a $20,000 position, which is a small position, I mean, very small. I mean, most of the US traders have at least $100,000 of buying power. So you use only 1/5 of your buying power, and it generates 1,000. 5% of 20,000 is 1,000. That's one trade. Of course, I'm talking here about ASN. It doesn't have shorts available, but this is for, again, like I said, for educational purposes. This trade is representative. So now, can this stock close down at 13 and become a $1, which is in this case a 5 to 6% winner? Yes, it can. We've seen it so many times. So those patterns repeat themselves. In this case, if you are lucky and you receive shorts and you end up with 3% winner, it's still again 3%, risking 1, it's 3 to 1. Okay, so that's ASAN. I have another stock that basically dropped, Dutch Brothers, but again here the technical pattern is perfect. Let me show you first the technical pattern and then we discuss the move. So you can see this move and then the bear flag formation. So this is a clear bear flag formation where the stop drops and you have a clear stop loss, but the issue here is you do have shorts, but how do you figure out? I mean, the stock is moving higher in the morning, so it's a long candidate. Then it turns around sharply and it becomes a short candidate, but at this point you lose interest because it's no longer either up 5% or down 5%. It's basically trading near the zero line. So if it's trading near the zero line, why would you even focus on it? So I have to say that, and you clearly see that there is absolutely no pickup in volume here. Many people, I think, were surprised, okay, by this move. So what happened here? Is it because of the jobs report? I don't know. So, but this intraday reversal, you know, I don't know what happened. I don't really care. I care about, can you execute the trade? In this case, I have to agree that you cannot execute the trade. The reason why you cannot get to the trade, because why would you look at the BROS? There are thousands of other stocks, and again, this is an example where the stock reaches the magic number, like down maybe at the close here. So it can be on a stock screener, but not in what we call daily power list. At least our daily power list, the way I designed it. So another disappointment. So let's move now to the winners, and of course this of the winner of today. Nothing was obviously easy about Samsara. The symbol is IoT. Okay, so what is this company does? Because 99% of traders never heard about Samsara. Develops internet connected sensor systems, whatever that means. And let's move now back to the chart. So the chart is very interesting. Take a look at this. So the stock gaps up on huge, on great earnings. So the stock gaps up from 35 to 40. That's more than 10%. Then sells off sharply, then moves higher sharply. Again, super tough and really tough to trade in the first 10 minutes. So is it moving down? No, it's moving up. Is it really moving up? Yes, it is. It does move up. Very tough to trade. So where do you trade it? Now, looking back at the chart, of course, it's easy to see in retrospect these higher lows and breakout at the highs of the day. It was over 41. Now, is it really feasible to trade it in the morning session? No, I don't think so. But again, there was a pickup in volume, but the pickup in volume was clearly because of the earnings. So that's obviously a given. I think the only place maybe to trade it was this area here, this consolidation anywhere between 41 and 40.80. Here you have the time to analyze and enter at 41, taking very little risk, like 20 to 25 cents, and ending up with let's call it 2 to 1, 80 cents to $1 of profits, risking 20 to 25 cents. So if to think about one entry point, this is the area, and then the move succeeded. Again, in retrospect, Friday, other than I will have to say Broadcom and maybe AMD, not an easy trading day as much as I saw. So sorry, let's move to another winner, Canadian Solar. So again, here it's easier. Why is it easier? Of course, not many of us are focusing on Canadian Solar, if any, but at least you have the signal, the gap up. So there is a signal, a stock is already over 10. So if it is over 10, it gets into your scanner. Now, where do you buy it? If again, you want to trade Canadian Solar in the morning session. I think it's easier to observe the pullback from the highs here and using either the VWAP or this clear support at 1060, so you can enter at 1070. That's only a 10-cent risk. In this case, it's the full 1%, and that's the result. Again, not very easy to observe, not very easy to be focusing on Canadian Solar when you have so many other. I mean, you're thinking about Broadcom up 20%, looking for a long. You spend the first hour on it, you're not going to watch CSIQ. So again, that's the drawback of being a lone trader in this vast 9,000 shares and ETFs market. Again, it's easy to move away and compile a very small list. That's our job as day traders. In this case, it's possible to deliver a good move here in CSIQ. Is it intuitive? Easy to figure out? Once you are in a trade, it's easy because the trade is doing only one thing here. Okay, but how to reach a CSIQ? Not very easy. Again, what is the motivation basically of trading CSIQ? Let's call it 0. Okay, let's move on to the last example. Lucid. So what's going on with Lucid? First of all, let's take a look at the daily chart because weird stuff happened. Let's go take a look at the YTD. So what happened in Lucid? Basically, as you can see, despite the stock not trading under $1, it delivered a 10-to-1 reverse stock split. Why? I don't know if they want to be legitimate again. They want to become part of the mainstream. I mean, no hedge fund or mutual fund or ETF is going to buy. Maybe hedge funds will, but ETFs are not, and mutual funds definitely not buy a $2 stock. So now it's not a $2 stock; it's an $18 stock. From that point of view, it's in business, but I don't think that will help much other than the visuality of the company. Having said that, it had a brilliant trading day, up nearly 14%. So what happened? Maybe bottom fishing. Keep in mind the stock price is not $18; it's 18 divided by 10, so it's 184. That's the real price of Lucid. So now let's take a look at the 3-minute chart, and you can see a strong close on Thursday and then continuation. I have to say that because of the split, there were people watching it. So there is a reason to watch Lucid. It can go both ways. It's shortable. So where can you buy it? I have to say again, the VWAP is a good reason to enter the trade. It's also a round number. It has very little risk, or relatively little risk, roughly 1%. And once it starts, moving here above the VWAP, basically it ends up almost at the highs of the day. So entry at 17, up $1.50. Again, why should you buy it? Just because it's because of the reverse split. Okay, the increase in volume, the big gap up. Well, it's not a big gap up and go, but it is a small gap up and go, and maybe you can use the round number. Are there any additional entry points? I think this pullback was a good entry point. This pullback was a good entry point. So basically, any pullback here was a decent entry point. Big winner in terms of percentages, yes. In terms of nominal move, not really, but trading percentages, especially on those stocks that are coming out of those what we call the daily power play or power list. It's smart to trade percentages because those are the strongest stocks, like I said, out of thousands. So if those stocks are not going to perform, who's going to perform? Okay, and we're not going down the rabbit hole with the $1 stocks that can perform 20% in a minute and then come back. And we don't want to scoop so low. We'll scoop for money, but not so low. Okay, guys, I hope it was clean enough. Again, the whole idea here is to replicate those type of trades, especially those that are really manageable, and those pullbacks are manageable. And this is the type of a pattern where it happens again and again. Sometimes the pullback is to the VWAP. If the pullback is to the VWAP, that's the easiest way to pick up the stock. Sometimes it comes very fast to the VWAP and ricochets in a V shape. It's tough to trade it, not because it's tough, but because it moves very fast. And if you're not focused, instead of having a 10 or 20 cent risk, you have a 40 cent risk. In that case, the risk reward is not worth it. Okay, guys, thanks a lot for being here. Do sign up for our channel if you're interested in any of our classes. Email us, especially the mentoring class, which has a discount for this month. Like I said, thanks for being here, and we'll see you on the next video.